David was on our show on Valentine's Day this year. Morgan Stanley was his first top pick, 19% return.
Yeah, listen, we came into this year very bullish. We've stayed bullish through the year. We think there's some very clear themes in place in this market. I think people know if something stops working, we're very quick to carve it out and move on. But the leaders are the leaders now as the leaders were then. And Morgan, all three of the picks today we continue to own. And in fact, in the financials, the capital markets, companies like Morgan Stanley are the absolute leaders. And they're just really breaking out a big basis to the upside. I think that they've got a long way to go in the current environment.
Your next top pick was Dow DuPont, this one holding its own, a return of 6%.
Yeah, Dow DuPont is we bought because it's going through this reorganization, putting the two companies together, and then they're going to break the company up into three pieces. And we really like it going forward. We like materials. We like Dow DuPont for the catalysts that are attached to it. And with relatively low feedstock costs and an improving economy, the opportunity to grow is there.
Very cheap natural gas is, of course, great for these chemical companies, yes. And they have been building petrochemical plants in the States. Slower to do it in Alberta, though, it seems.
That's right.
And you said materials. Does that extend to mining, base metals? Are you bullish there?
Sorry,
no, you just, on the context of chemicals, you mentioned that you like the look of materials, I think.
Yes, so we're invested in chemicals, we're invested in timber, we're invested in lithium, we're invested in some metals. We have quite a number of materials companies in the portfolios right now.
And that's partly a bullish economic output?
Outlook. It's global reflation.
Okay. And then your final one, this one has flown. Home Depot, a return of more than 30%.
Yeah, Home Depot's had a very good go. All of these companies are in the right spot. The Home Depot was really a play on a resurgence in the housing market in the U.S., which is growing very nicely in most major states. The millennials are starting to buy homes. You're getting homes purchased and remodeled. And Home Depot is growing at twice the growth of GDP on same-store sales. They've been able to grow their dividend north of 20% a year for the last 5 years. It's just a great way to participate in that theme, and a company that's winning within that theme.
What about Lowe's? That has lagged as far as I know. Maybe we can put up a chart.
Yeah, you know, I just not a big believer in buying the laggard. Home Depot's just done a much better job. They've done a much better job in attracting the pro buyer, so that the home improvement professional. And so I would stick with a Home Depot.
So you're not into the silver medal place, or what did Jerry Seinfeld say? You win the silver medal, you're the biggest loser.
Yeah, no, it's all about, here's the thing. If you're the leader in an industry, you have an easier time raising capital. You have an easier time hiring the best employees. You have an easier time winning business. It's hard to knock the leader off the perch. So why do you want to try and buy the one you're hoping is going to catch up? It doesn't happen that often. And so I want to find, the most important thing is find the right theme in the right asset class, which I think is equities right now, and then buy the leading company. The first one to get going will be the first one to double in a group, will be the first one to double again.
And just finally on real estate, what about the Canadian run-up in real estate? I mean, we're still up 9% year over year nationally with house prices. Are you wary of that?
Yeah, I prefer, I mean, you hear it, I mean, I prefer investing right now in the U.S. market in companies that are more global by nature or domestically focused in the U.S. I think Canada has some more headwinds and doesn't have the same positive catalysts. We've got a government that is going counter to every other major industrialized country when it comes to regulation and tax. So why do I want to put more money in Canada when I can get more friendly treatment investing somewhere else?
We are going to be back with David Burrows of Barometer Capital Management. He's answering your questions on North American large caps. 1-855-326-6266.